Chris Larson, welcome to the podcast.
Thank you. Thanks for having me. I've been looking forward to this.
Likewise, likewise. I've been really looking forward to because you trace kind of an interesting arc for our listeners. You are now a GP at Alder Point, and you previously were an LP at New Line Capital, and so you've been on both sides of the table. And I want to get to that. But first, we did notice that the SEC filings you've reached a first close on Alder Point, and hats off to that. And you're actually deploying capital. So just catch us up on what is Alder Point and what you're doing.
Yeah, happy to do so. So Alder Point Capital Management is a sustainable real assets manager that invests in U.S. farmland and timberland for commercial and community outcomes, as well as environmental outcomes. And this really builds on work that a team of myself and two co-founders kind of pioneered at a family office for about 10 years, where we were able to deploy a lot of capital on a direct basis into these types of assets, but also invest in funds, as you mentioned. And really kind of what we learned along the way was that in these types of assets in rural communities across the United States, we're managing natural resource properties. There are lots of opportunities for impact interventions, moving properties from conventional management to ecological, organic, and regenerative management, pursuing conservation transactions where you're permanently protecting land as working farmland and timberland, permanently protecting biodiversity values, and then this idea of resource efficiency, electrification, on-farm renewables, farming, growing more food with fewer inputs, things like that. What we learned was that these impact interventions not only are delivering good from a climate, biodiversity, worker health and safety perspective, but they're also driving returns. And so that's a particularly exciting way, because we feel like that's a scalable strategy. So that was something that we started doing at the family office, and are bringing to Alder Point kind of to a much bigger investment audience.
So this is what I think folks, I think you call it sustainable real assets. Some folks would think of it as, conservation. Obviously, it's also sometimes goes as nature-based or regenerative or sustainable. But I think you do fall down on the kind of working lands side of this and productive assets, right?
Yeah.
There's real farming going on, real ranching going on, real activities going on, as opposed to setting it aside without any human activity, right?
That's correct. Yeah. Our thesis here really is that there is a lot of long-term tailwinds around high quality properties that can grow food and fiber. And that's true because of land degradation, climate change, growing global protein consumption. And so we organize the strategy to say, okay, you can deliver these climate and biodiversity benefits, but the right venue for doing them is these working lands. There are a lot of other strategies that might be more focused on pure conservation, pure mitigation activities. But the question with those deals in a lot of cases is who buys those when you're done, kind of transforming them. And so from our perspective, there's this unbeatable pairing of a core kind of return driver, a kind of investment engine around producing high quality organic food or sustainably produced forest products, while also delivering all these ecological and rural community benefits along the way. And so that's what we feel our strategy is kind of designed to do.
Just give us an example. I know you've already put some deals together. So how does this work in practice?
Yeah. So one of the first deals that we're working on is a vehicle called Cold Springs Forestlands. So this is up on the far Northern California coast in the Redwood region. There's lots of small properties that are sort of in a quasi-distressed state for a variety of reasons. They haven't been managed for a long time. So in some cases, they've got great timber value. In some cases, they've been degraded. We're focusing on ecologically important watersheds, like think upstream of Redwood National Park, where we are assembling these bunch of small properties back into larger scale land management units. What you get when you do that is the opportunity to manage across a landscape, which is kind of a big concept in the conservation world. Species need habitat to roam. They don't need little chopped up pieces of land. They need big landscapes. And so by reassembling land into these larger tracts, we can more effectively manage them both for ecological forestry, carbon sequestration, but also all these watershed values, fixing up old roads, tree planting, improving salmon habitat in these rivers, that sort of a thing that's really only possible at this somewhat larger scale. And we're not talking, major scale, but kind of buying thousands to tens of thousands of acres in this kind of roll-up strategy to really unlock both these financial and ecological values. And kind of a hallmark for us is this idea of doing this work in deep partnership with local communities and using the investments to build local capacity for this regional sustainability transition.
Well, so how does that work in farmland?
Yeah, farmland is really, exciting for us. I think a lot of nature-based investors look at forests and they see these large wild landscapes, but farmland is really important from a climate and biodiversity perspective. It's where the water is, it's where the best soils are, it's the habitat that we first converted during European settlement. And so when we look at farmland investments, what we're really looking for is this combination of really high asset quality, so great soils, great water, close to markets, but also where there's some conservation or biodiversity value. And so our first farmland investment in the fund is in the Willamette Valley. It's right next to a huge growing city where farmland is being paved over time. And we're going to be able to use that property to both grow regenerative organic blueberries, but also we hope to achieve some conservation outcomes in terms of permanent protection of the farm, the ecological resources on that property. And then also from a social perspective, use that farm to kind of drive this business ecosystem that I described around working with the right irrigation contractors and agronomists and pest specialists and working with the supply chain of berry companies that will be buying berries from us to bolster kind of the brand and market presence for regenerative berries.
So can we buy your berries somewhere?
Give us about 5 years, and we should be in markets all over the country.
This must take you back a little bit because I know some of your misspent youth was working salmon restoration in the north coast of California as well.
Yeah, I mean, that's where I really was turned on to this idea that working in partnership with local communities was really the only way to drive long-term ecological change and transition, right? At the end of the day, obviously a lot of land use and kind of how we manage forests is driven by economics, but there's also a cultural and community held dimension of it. Who has social license to do what practices? How does that evolve over time? Is there community capacity to do logging in a good way or not in a good way? Who is available to do a native grassland restoration project? And so we really like to work in communities where those capacities exist to some degree, and we can help scale them up. And that in some ways is the biggest impact outcome of our investment strategy, is kind of bolstering and growing and fostering this sort of regional regenerative economy that is focused on land management with a more ecological lens. And so on the farmland forestry side, I gave some examples. On the farmland side, it could be as simple as here's an irrigation vendor that is really attuned to developing energy efficient irrigation systems or managing water use efficiency, that sort of a thing. Same thing on the agronomist. Okay, you have an agronomist, an expert in pest control. What kind of chemicals do they suggest? Do they competent in organic production systems? That sort of a thing. And so we want to work with those local businesses, supply chains, and nonprofits to kind of reorient the kind of broader production systems in a region.
So now I want to just take this back up to the ecosystem of finance that makes all this happen. Because in a sense, you're bringing capital to projects and communities. You're now doing it in a much more hands-on way as a fund manager. When you were doing it as a LP in this family office, I think you had a similar kind of thesis, but you were a level up in the ecosystem, as it were, and you were working through others. So just tell us the difference and why you wanted to get kind of your hands at least a little bit dirtier.
Sure. Yeah. Well, maybe to clarify, we did do quite a bit of direct investing as well as fund investing. And so it was a really kind of a unique career opportunity to sort of have visibility into a lot of different strategies in the market, including ones we didn't ultimately invest in, and to kind of see how those played out over time. And kind of it was sort of an accelerated learning to kind of have such a lens as an LP, right? So when you're an LP, you're a large allocator. There's a line out the door of funds and direct deal sponsors kind of pitching things to you. So it's a great way to see a lot of things, but it can be hard to kind of go deep and develop the specific execution capabilities that you need to ultimately be an effective GP.
So your hands already had a little bit of dirt under your fingernails in that role, but you were, as you said, fielding proposals in many cases from folks who had ideas, as well as probably they knew what you were looking for, so they were bringing things to you. But what is the difference when you were sort of, as you said, fielding the line out the door versus being part of the line out the door for others?
Yeah, great question. I mean, it has been, I think kind of breadth versus depth is like an obvious one. I think LPs, in order to construct a diversified portfolio, do need to look at a lot of different managers, a lot of different strategies, that sort of a thing. I think to be an effective general partner of an investment vehicle, you do need to go deeper into your markets to be really competitive. I think we're in an asset class where we're 98% of the folks we're competing to buy property from are not investors. They're not impact investors. They're just general kind of participants in the real economy. Main Street folks, large farmers, foresters, supply chain businesses, that sort of a thing. And so a lot of the frameworks of impact investing are sort of not relevant to this sort of larger landscape that we operate in, but we still have to kind of hold true to our own principles and what our investors are looking for when we're out in the market, buying property and kind of shaping these management arrangements, that sort of a thing. I'd also say it's been really interesting, having the opportunity to engage with and interface with so many thoughtful investors along the way, and kind of how diverse different due diligence processes are, and the kind of effort that folks put in, the risk sensitivities we have. I think the opportunity to engage in diligence processes with some of the biggest impact investors globally has really sharpened us up in a lot of ways that I think are really helpful to our business. And so we do.
Is that the diplomatic take, or did folks jump you through hoops and string you along? Like, what is the environment out there now for obviously a well considered and intelligent pitch on a topic that is obviously central to the future in terms of climate resilience and everything else? Are you getting a good reception?
Yeah, I mean, it was a slow, like you might expect, and kind of it can be slow to get a new business like this up and running. But I think we've been really pleased with the interest level of the investor community at large. We're seeing, I would say, a pretty sustained interest in climate and nature, despite what's going on in kind of climate hushing in the United States, that sort of a thing. That I think we're really pleasantly surprised at kind of the global interest in these topics, and kind of the fact that I think investors in some ways have seen, kind of the understanding the complexities of the climate crisis has helped investors kind of get up to speed more quickly on the biodiversity crisis, which is in some ways a much more long-term and more difficult to address kind of issue in our natural world, I would say, and one that has profound impacts for human communities and the economy and so forth.
Global investment interest is, as you say, is an interesting topic, and money for global renewables and other things comes from interesting sources, including oil and gas money. But people have said that there's a lot of interest in Singapore, and obviously in the Middle East, but also Norway and some of the Europeans. What are the fertile grounds for folks who are sort of still want to take some dramatic climate action?
Yeah, I would say all of those places have been sources of capital for this space at large. I mean, there've been very large deals. I would say that certainly kind of the Nordic and Benelux investors have been active in the space for a long time, but a professed interest in U.S. real assets. I'd say in the last 5 years, you've really seen a sharp rise in the number of Japanese, Korean, Singaporean firms that are making large moves in this space. And so that's encouraging. I think as an investment destination, what the U.S. offers is scale, right? If you want to go buy attractive farmland in a Nordic country, they're very small and fragmented, and there's a lot of complexities related to subsidies and government programs, and we have our fair share of those types of things in the U.S. as well. But this is one of the few places in the world where you can buy as a fee title interest in property an asset that's worth $500 million or $1 billion. It just doesn't exist in many places. And so a lot of large allocators see the U.S. as an attractive place to deploy a natural capital strategy because we have those things. We also have very, very productive lands here, both on the timber side and the ag side. We're biodiversity value, maybe not competing with the Amazon or the Congo Basin, but on the other hand, we have large areas in the United States where you still have large carnivores, you have free-flowing rivers, you have biodiversity hotspots like we do in the Southeast and in California, where there's lots of species richness. There's a lot to do in the United States around these themes, and I think private capital is well suited to do so.
Just at a broad level, when you recount the natural landscapes and whatnot, is climate change a threat to your assets, or is it in some sense a driver of value because these more resilient and restored landscapes will actually become even more scarce and therefore valuable in the future?
Yeah, that's an excellent question. So, if you followed the natural capital, nature-based solution space, there's a lot of folks that are touting the benefits that a well-managed forest can have in terms of pulling carbon dioxide out of the atmosphere. There's a lot of interest in regenerative agriculture for the same reasons, this ability to mitigate climate change. We see those things. We tend to follow the science on it, which I think is a little bit stronger on the forestry side. But I think one of the things that we don't hear a lot from our peers is around climate risk. Now, if you go to a conference of asset owners or asset allocators, there's a lot of talk about how do we manage climate risk in our portfolio. But when you talk to investment managers, kind of the middlemen between the asset owners and the assets, there's not as much talk about this topic. And so we really have sought to set Alder Point out as a thought leader on this topic of climate risk, right? The downside to our forests and agricultural lands from climate change is significant. Wildfires, drought, the aridification of the Western United States, need for more water because water is evaporating off the landscape faster. These are all things that are very much driving crop losses, driving loss of forest land, that sort of a thing. And so we really take kind of a whole company look at this issue. And we really think from first and foremost, what regions do we want to invest in that we think will be more climate resilient? Because at the end of the day, when we exit assets, we need buyers of those assets to understand and believe that they're going to be relatively climate resilient. And so that kind of colors where in the United States we want to invest. Then we think about, okay, well, even a relatively climate resilient region like Wisconsin and Michigan, there are still climate impacts underway in those regions, right? In Wisconsin in particular, you have kind of a sharp increase in these really strong precipitation events that can make farming very challenging. And so that kind of then informs, well, okay, in this landscape with these kind of emergent impacts, well, where do we want to be on the landscape? Maybe we don't want to be in the river bottom that's going to flood all the time. So we tend to think about that as well. And then finally, we think about operational resilience. How can we make this property a little bit more climate proof? And that's kind of a misnomer to some degree because nothing can be climate proof. But investing in resilience is an important thing. And it all gets back to your point at the end, which is like these assets are becoming more scarce. The number of acres that we're going to be able to grow corn and soybeans on in the United States in 2060 are going to be in different locations. There's going to be fewer of them. And a lot of the choices that we make about how to manage land is going to play into that. And so we are big believers in managing climate risk and investing in resilience.
So just the capper now, Chris, you've been, as we said, a young conservation salmon restoration guy. Do I have that right? In your youth, you've been an asset allocator for a single family office, and now you're an asset manager, a GP for your own fund. So for any young career seeker coming into impact, let us know like where you can have the most impact and where you can have the most fun.
Wonderful question. Yeah, I think that there's opportunity to have impact really across the spectrum, right? I think that we really see kind of individual leadership within asset allocators and asset owners as a very significant determinant of how effective their strategies are. So I place a lot of value in sitting in that seat. I am having the most fun of my career doing what I'm currently doing, the opportunity to work with a diverse set of investors, have control over the investment strategy, and be accountable for the results is a great recipe for really hard work, but also really rewarding and really fun. My advice for younger folks coming into the space, I'd say when I got into impact investing in 2008, it was so niche that you could be an impact investing generalist. You could dabble a little bit in affordable housing and environmental and healthcare investing and that sort of a thing. And I think the space has gotten so big, and so the folks involved are so thoughtful. I think it really does pay to become more of a specialist. Kind of find the asset class that you're temperamentally suited for, and what I mean by that is, there's not a world in which I'm going to be a venture investor because I don't have the risk appetite for it. And so I'm quite happy where I am from an asset class perspective, but I also feel deeply connected to the impact themes that we are able to drive through investing in this. And so I think when we are doing recruiting and talking to candidates, I think the ones that really stand out are the ones that have conviction around an investment idea, have done their homework, understand the landscape of managers in that space, and have a thoughtful approach to how they would allocate if they were in the driver's seat.
Beautiful, Chris. You've given me a new interview question. You don't have to ask a applicant, what animal they are or what vegetable. You ask them what asset class they are.
Exactly.
And Chris, hats off to you. I know it's a difficult environment out there, but we'll be watching Alder Point, looking for the deals, the trends, and your insights as always. So thanks for joining us.
Thank you so much. It's a pleasure.